Hello guys, fairbinaryoptions.com here. We are looking at the Euro Japanese yen on the 1 hour chart, and we're looking at a possible continuation pattern. You might say, which one is the continuation pattern? Well, the last move here is the one. Now we have a lot of clues on this chart, and all the clues are pointing towards more upside to come, and therefore we like to buy call options with end of day expiration day today. Why the clues pointing to the upside? Well, first of all, we do have here a contracting triangle that goes A, B, C, D, and then the E wave is just this one small here. And this contracting triangle will go like any triangle within the A and C trend line and the B to D trend line. And from here to here. And then try to project this trend line of the triangle, the B to D trend line, the all important line, projected on the right side, as you can see. And this is just where price bounced on the latest spike that we had to the downside the other days. So this is just as bullish as it can be. Why? Because the triangle has been broken to the upside, retested, and then rejected. On another attempt to the downside, it came exactly to this area here. Now, in terms of what price did after this briefly, or this brief dip here, this resembles also like a possible inverse head and shoulder. But the thing is that it cannot be, let's say, labeled as a head and shoulder, as an inverse head and shoulder, because those patterns are appearing after a downtrend. This is after a trend to the upside. So in terms of Elliott waves, I would say that this is a classical impulsive move, an impulsive move that starts from the lows here and goes to the upside in the following manner: 1, 2, 3, 4, 5. This to be the end of the first wave, or wave A if you want. Most likely a wave A to be to the downside, as this is a corrective wave that should go to the upside. Then after the wave A here, the B wave can only be this contracting triangle, but I would say it is only part, the contracting triangle is only part of the whole pattern here, because this would be the end of the B wave. And now we're looking for a C wave. Now this C wave to the upside needs to be a 5-way structure. 1, 2, 3, 4, 5. Do we have a 5-way structure here? Well, most likely what we have here, it is only a first wave of a lower degree to the upside. 1, 2, 3, 4, 5. And then price is forming a running variation of a contracting triangle. And this running variation of a contracting triangle between you and me, it's quite bullish. Why it's quite bullish? Because it means that the second wave will end above the previous wave's high, and that means price is bound to go to the upside with a more aggressive move. So this to be the first wave, the first correction, the X wave, then a contracting triangle, and price to break higher. That running variation of a contracting triangle is actually the end of that second wave out of that lower degree. Normally we're looking for an extended move to come out of such a pattern, and the extended move to go and reach or extend more than 141.20, maybe even higher. All in all, what I'm trying to say is that even though here this seems to be like the previous area, the previous resistance area, and this is why price is hesitating, okay? Make no mistake, it tried here once, it has been rejected once, 2 times, 3 times. So it was only normal to hesitate here again. So even though this is happening, what we are looking in on the bigger picture is for price to break higher and never look back here for at least the short to medium term. So as a consequence, we like to buy call options. And these options, we are buying them with end of day expiration date. Buying call options with end of day expiration date. Basically for 21 GMT, today, as markets will, or the majority of binary option brokers offer you this expiration date for your binary options. So thank you very much for being here. This is fairbinaryoptions.com, and all these analyses and recommendations are possible due to the help of our sponsor here, Lion Knife. Bye bye.